Welcome to Tesla Deep Dives. The topic today, the ultimate capital allocation, why Tesla is sacrificing the Model S/X Halo for the Optimus AI Vertical. For a decade, the Model S and Model X defined Tesla's premium image, their halo effect drawing in millions of mainstream buyers. Now, Tesla is making the ultimate capital allocation decision, sacrificing these iconic vehicles. The pivot was confirmed on the Q4 2025 earnings call, where CEO Elon Musk announced both models would be discontinued by the end of Q2 2026, with the production lines at the Fremont factory being repurposed for a single mission, the Optimus humanoid robot. This isn't just a product refresh, it's a radical redefinition, a move from a car company with an AI vertical to a physical AI company that happens to make cars. The sacrifice is primarily financial, not emotional. The Model S, launched in 2012, and Model X, launched in 2015, had become relics on the balance sheet. In 2025, Tesla delivered approximately 1.64 million vehicles, but an estimated 97% of that volume came from the Model 3 and Model Y. The Model S/X combined sales were estimated to be only about 30,000 units for the full year, generating roughly $3 billion in revenue, a drop of over 30% year-over-year from late 2024 estimates. The Fremont lines for these models were running at a small fraction of their 100,000-unit annual capacity, making their continuation an inefficient use of premium factory space. The pivot is perfectly timed to distract from, or fundamentally solve, core automotive troubles. In 2025, Tesla recorded its first-ever annual revenue decline, dropping 3% to $94.8 billion, with automotive revenues contracting by 10%. GAAP net profit for the year nearly halved, plunging 46% to $3.794 billion. This weakness, combined with intense competition from rivals, like China's BYD, whose EV sales outpaced Tesla's in 2025, forced an immediate and dramatic shift in the investment narrative. The new capital allocation is seismic. CFO Vaibhav Taneja confirmed the company's capital expenditure is set to surge to over $20 billion in 2026, more than double the $8.5 billion allocated in 2025, to accelerate AI, robotaxi, and Optimus development. The plan is to convert the Model S/X lines to production space for Optimus, with the third-generation robot expected to debut in 2026 and mass production aiming for 2027. Elon Musk has declared Optimus will be the biggest product of all time, projecting an eventual production target of 1 million robots per year, each potentially selling for an estimated $30,000 to $50,000. Financial analysts are framing this as a logical, albeit high-risk, calculation. William Blair analyst Jed Dorsheimer explicitly stated Tesla is trading S and X for Optimus because the economics favor the shift. The firm estimates that even half of Musk's million-unit goal, around 500,000 robots at a $50,000 average selling price, would generate an estimated $25 billion in annual revenue, which is more than 8 times the Model S/X 2025 revenue. One popular retail analyst summarized the sentiment by stating Optimus could generate 10 to 20 times the revenue of the discontinued vehicles. The market's initial reaction was supportive, with the stock rising despite the poor earnings, indicating the AI narrative dominates sentiment. Analyst Andrew Rocco of Zacks Investment Research noted, with Tesla's legacy EV business slowing, Tesla investors can take part in the scorching hot AI boom. However, a strong counter-narrative, predominantly from bearish analysts and traditional auto observers, focuses on the immense execution risk and the fact that these AI initiatives remain unproven and not widely available to the public. This camp sees the high $20 billion capex ramp as a drain on resources and a gamble. The discontinuation sparks an identity crisis. While the Model 3Y are the breadwinners, the S and X were the brand's moonshots, the P90D, the Plaid, that fostered a passionate community. Reactions on platforms like Reddit and X reflect a sense of nostalgia and betrayal, with some users stating, "They're literally killing the Model S/X line." This move risks alienating a segment of the premium buyer market, further narrowing Tesla's showroom offerings and relying entirely on a volatile future vision to maintain brand cachet. The ultimate capital allocation is clear. Tesla is intentionally dismantling its automotive legacy to secure what it believes is a hyper-growth future. Musk's strategy is to capture an AI multi-trillion-dollar opportunity over a fading automotive margin business. This is a net positive for a high-growth, technology-focused valuation, but it cements Tesla as a pure-play tech company, not an automaker, with its financial success now inextricably tied to the successful deployment of a production-ready $30,000 humanoid robot by 2027. Investors must now monitor non-traditional metrics. The core indicators for this new Tesla will be the quarterly updates on the $20 billion capex spending efficiency, the successful deployment of Optimus prototypes within internal Tesla operations, and the timeline for version 3's mass production design. Specifically, watch for any delays to the 2027 public sales target, which could erode investor confidence and trigger a reassessment of the stock's valuation, which is currently underwriting a future of amazing abundance from autonomy. Let me know what's your thoughts and leave your comments. Thank you for joining us for this deep dive. To ensure you never miss a pivotal analysis, please like the video, subscribe to the Tesla Deep Dives channel, and hit the notification bell. Your engagement fuels our critical research.